Joining us now, Anthony Pompliano, co-founder and partner at Morgan Creek Digital. Great to have you with us on the show, Anthony. Let me just start off by talking about how the US and several other markets continue to be trading at those record highs, while economic realities, of course, are slightly different. But, are we really going to, what are you making of this exuberant mood that we are seeing across markets?
Yeah, I've been writing a ton about this at pompletter.com, where what we've really been talking about is this idea of the Federal Reserve in the United States and other central banks around the world have essentially stepped in. So when the global kind of health crisis hit, everyone was ordered to shelter in place, go inside, and that slows down the velocity of money. When that slowed down, the government basically went in their toolbox and used the 2008-2009 playbook, and they stepped in, intervened in markets. They had two emergency rate cuts in the United States, and they pumped trillions of dollars in liquidity through quantitative easing. And so when you do that, you essentially create an environment where you systematically weaken the dollar and you juice asset prices. And so what we saw was in March, during that liquidity crisis, equities were down 30%, Bitcoin dropped 50% in a day, gold was down 12 to 15%, bonds, everything was falling, correlations were going towards one. As soon as the government stepped in with the quantitative easing and juicing the markets, you then had everything kind of immediately turn and go back up, aggressively. And so now you've got stocks at all-time highs, you've got gold up, 20, 25%, you've got Bitcoin up about 70% on the year. And so I think that you're just flooding the market with cheap capital. And of course, you're going to see asset prices rise from there. And so you have a complete dislocation between the economic reality and the asset prices in the market today.
Okay. How should investors navigate these times then, in your point of view? What's the best strategy?
Yeah, I think the key things to understand are one, patience is always really, really valuable in these situations. Sometimes the best thing to do is to do nothing, right? So if you had panicked during the liquidity crisis and you sold equities during that 30% drop, you basically missed out on the recovery. And so you kind of got shaken out of the market. Now, at the same time, I think that people need to understand structurally what's occurring here, which is trillions of dollars around the world are being injected into these economies. And as we know from history, that is going to weaken the currencies. And so there is the likelihood that we're going to, one, see inflation, but two is you're also hearing rhetoric from a lot of people in the Federal Reserve today that are saying, look, maybe we need to actually overshoot the 2% inflation target, right? Maybe we shouldn't do anything until we hit 2.5 or higher in those official kind of CPI metrics. And so when that occurs, one, the bottom 40% of people in a population in the socioeconomic ladder, they experience higher levels of inflation. So they may be experiencing something, upwards of 8 to 10% inflation when that occurs. And then two is if your currency is going to get devalued, that means asset prices are going to continue to rise over a long period of time. And so I think that people just have to understand that structure and realize that holding a bunch of cash is actually going to have your wealth stolen from you because you're going to lose purchasing power. And instead, you should actually be investing in assets. And so kind of the way the system is structured is it rewards investors and it punishes savers. And I think that's what we're seeing kind of start to play out here. And it's likely to get more aggressive in the coming months and years.
Interesting, Anthony. Morning, and wanted to get in your take as to what has really been leading this rally in the US. And those FANG stocks have definitely taken a lot of leadership. A lot of tech companies now want to take the share of flows, the likes of Airbnb as well, looking at their IPO. What do you make of this overall tech move?
Yeah, I think that what you're starting to see is companies have stayed private much longer. And so that was because there was tons of venture capital available in the private markets. But what you all have seen over the last couple of weeks and even a couple of months is whenever you get these raging bull markets, companies want to race to get into the public markets. There's inflated valuations, and they can basically go out and in a less dilutive way, put a lot of capital on their balance sheet. And so, with Airbnb, like what's interesting is the company actually got hit pretty hard by the pandemic. Obviously, people just weren't traveling, but they're still going to try to get out into the public markets because it's so compelling to do that, given that environment right now. And so I think you're seeing a lot of these companies do that, whether it's through traditional IPOs, SPACs, direct listings. It's just if the market's going to give kind of these inflated valuations, of course, there's a financial incentive for people to get into the public markets. And that's what we're seeing them try to do.
Right. So that's on the one side, really cashing in on the markets with these IPOs. But you've also seen, quite a bull move in the Bitcoin as well, the acceptability of which is improving while things aren't all quite clear and approvals aren't entirely in place. Would you bet on this?
Yeah, anytime that you've got kind of an asset that has a provably scarce supply, I think people are going to be interested because, as we know from kind of economics 101, if supply is capped and demand increases, of course, price goes up. Right. And so I think that's kind of the high level of it. Now, two is that the technology itself is just superior to other things in the market. So there is no other digital decentralized currency that can be used anywhere in the world in the way that Bitcoin can be used. And so I think people are very interested in that. And then lastly is that the macro environment, right? That inflation that I talked about in 2008, people forget that gold went down 30% over the summer of '08 during that liquidity crisis. And then once the government stepped in with the quantitative easing, it went up over 200% in US dollar value or price. And ended up hitting an all-time high in 2011. And so I think not only did the Federal Reserve have the 2008, 2009 playbook at the top of their head, but investors also remember that. And so when you see kind of this economic, chaos, government steps in, everyone immediately thinks, okay, asset prices are going to pump, and they start running for inflation hedge assets. And so that's where you see gold up, again, 20, 25%. You see Bitcoin up about 70%. And what you're really just watching is investors' fear of inflation is almost more important than the actual inflation itself ever occurring. And so they're going to look for those inflation hedge assets. Bitcoin's got a very small market cap compared to gold and other assets. And so, of course, it's going to be more volatile. And I think we're just seeing that play out.
Right. Anthony, I have to get your views in on gold. How is it that you're viewing the rally? Now even Buffett is joining in the party and buying gold mining stocks.
Yeah, look, I think that the thesis for gold has remained the same, which is essentially that anytime that there is a lot of quantitative easing, people are going to seek out sound money principles. And so both gold and Bitcoin have those sound money principles. I think where gold and Bitcoin investors kind of diverge in thought process is how to allocate to those applications of sound money principles. So I think a lot of gold investors would say, look, gold's been around for 5,000 plus years. It's very kind of conservative in terms of risk. And so because it is conservative in terms of risk, you're going to get a return, right? It's up 20, 25%, it's up more than stocks, all that kind of stuff this year. But what you're not going to get is kind of the explosive growth that something like Bitcoin can provide. And so Bitcoin is riskier, and therefore you get paid for that risk in terms of the potential return. I think gold is more conservative. And even though you're going to get a lower return, in my opinion, than you will in Bitcoin, it's still going to do well because the macro environment just simply incentivizes people to go protect their wealth. And so whether it's gold or gold stocks, I think that there's a lot of people looking around saying, I need to somehow get an inflation hedge, and gold is a place that you'll find a lot of capital flowing to.
Anthony, you've been advocating skilling and educating yourself a lot during these lockdown times. What is it that you would tell or advise to all the self-learning investors, the budding new traders which are emerging during these lockdown or stay-at-home times, who are mushrooming all across the world, not just in India?
Yeah, look, I think that, the people that are successful in life generally are intellectually curious and they want to improve, right? And that improvement can be in anything from how to get better at finance and investing to, perfecting a physical skill to a whole bunch of different things. But I think ultimately what comes down to is that intellectual curiosity and that discipline to kind of invest in yourself. And, there's the financial investments you can make, but ultimately those investments in yourself are going to pay off the greatest dividends. And I think that, right now, while people are sitting at home kind of in this quarantine period, they have access to the internet, and they can use, a plethora of different platforms and services to not only educate themselves, but actually come out of it with new skills, right? And some of those skills will be kind of tangentially related to what they already did, maybe make them better at the job that they were already doing. And some will actually empower people to transition from one job to another. And so I think that the thing that people should be paying attention to is simply, if you want to improve, if you have that intellectual curiosity, everything is available on the internet, and right now provides a great opportunity to go spend the time to do it. So hopefully people take advantage of it.
Okay, what about the Fed? You talked about how, of course, we've been seeing this, gush of liquidity. But, when it comes to EMs versus DMs, how this is really going to play out?
Yeah, my kind of advantage doesn't come in the public equity market. So I don't want to kind of comment too much on the difference there. But what I will say is we know two things for sure. One is that innovation leads to returns. And so anytime that you've got kind of fast growing developing markets, there tends to be a lot of innovation. That innovation is what drives returns. So I think that's kind of just from a structural high macro level. That's why these emerging markets are interesting. The second thing is that most investors realize the benefit of investing behind demographics. So it's pretty easy to kind of see these macro trends playing out when you look at the demographics. And so there's many emerging markets around the world that have very, very compelling demographic growth. And so, take a country like Nigeria, which I went to a couple of years ago. And when you look at it, it's going to be one of the most populous places in the world. And they will continue to grow at a very fast clip. And it will have a young population for a long period of time. And so I think people start looking at markets like that. India obviously has a massive market in terms of population. They tend to be young. There's a lot of internet penetration going on. And so you're basically onboarding an entire generation of a population in a country that is going to lead to a lot of kind of value creation and also value capture for the companies that help facilitate that. And so I think that emerging markets is an obvious place for people to look in terms of innovation and then that value capture.
Okay, that's interesting, looking at some of the demographies in various countries, demographics rather. Anthony, wanted to get in your take as to how you see the quality of recovery play out globally.
Yeah, I mean, look, some people would argue that the recovery already happened, right? The stocks are at all-time highs. All these other assets have gone up. Now, I think that my personal perspective is that there's a big dislocation between the stock prices and the actual economic realities on the ground. In the United States, we've had 50 plus million people lose their jobs. There's still 10 plus % unemployment. You've got millions of businesses that are going to end up going out of business. There's probably another stimulus package on the way. And so when you start to look at a lot of these data points, it's just very obvious that the economic reality on the ground is, still carnage, right? I mean, there are a lot of people being hurt very badly by this, but it's somewhat being masked in terms of metrics that people look at because there's been so much liquidity pumped into the market. And so that's where you get the asset prices increasing. The real question people should be asking is not just when will asset prices recover, because that's pretty much already happened. It's when will the economic reality improve? And that's a much harder question to answer because as we know, you can't just kind of decimate the small business landscape, for example, and then just hope that all those businesses come back immediately, right? And I think that actually what we're going to see in the United States is somewhere between 15 to 25% of small businesses are going to end up actually going out of business throughout this period. And so it's going to end up being a pretty horrific kind of scene. But America and other places around the world are incredibly resilient. And I think that entrepreneurs are some of the best problem solvers. And so if we can just give them the resources, get out of their way, entrepreneurs will bring back all these economies, faster than we can hope.
Anthony, great to have you on the show today, and glad that you could take time out and speak with our Indian viewers.